This video data is as of August 9th, Friday. Howdy, swings. Not much happened yesterday except for some small news like TSMC's good sales overnight. Despite the little bit of good news, the market opened lower, but quickly recovered to challenge the resistance level of 5,350 on the S&P 500 index and ended the day in the same position as yesterday. Will there be any drama before the new CPI report is released? Let's take a look at Fullhapce daily swing market forecast. Swing trader's friend, Fullhapce Intelligence presents today's Wall Street market forecast for August 9th. Here are daily market moves. The market traded sideways with the S&P 500 hovering around 5350, with the VIX index in particular taking a big hit. S&P 500, 5,344.16, 0.47% up. Dow Jones, 39,497.54, 0.13% up. NASDAQ, 16,745.3, 0.51% up. Russell 2000, 2087.8, minus 0.34% down. Phil Semicon, 4,709.45, minus 0.43% down. VIX Index, 20.37, minus 14.38% down. Here are daily sector performances. The tech and media sectors were a notably positive performer, with Oracle, Apple, Meta, and Micron among the biggest gainers. Other strong performers included healthcare, some consumer staples, autos, and home builders. On the other hand, regional banks, semiconductors, casinos, and transportation did not perform well. Here are the reasons. Today's market was a quiet one with little new news. Volatility has eased significantly and investors are preparing for major upcoming events. Monday's intense sell-off appears to have subsided, and the recent stabilization has restored some investor confidence. Investors are putting recession fears to rest and focusing on positive technical data and upcoming Fed-related news. However, the market has yet to regain the strong buying fervor of early July. Here are things to consider. The Canadian jobs report for July was disappointing. A report of job cuts at Cisco added to concerns about the U.S. job market. China's Consumer Price Index, CPI, and Producer Price Index, PPI, suggest that the country is facing serious growth issues and falling inflation. The U.S. is working on new regulations to restrict the sale of certain technology products to China, which are expected to be announced soon. Global tensions are rising due to uncertainty over potential retaliatory actions by Iran and Hezbollah and Ukraine's recent military action against Russia. The market made a third attempt at the resistance level of S&P 5350, but failed to break through again and stayed at 5330. Nothing changed, so the odds of a double dip are almost equally matched against the odds of a rally as they were yesterday. Today's market moves only proved that the resistance is still strong. On the other hand, the volatility has decreased significantly, which reassured investors, so the chances of a small piece of good news pushing the market up are high. With two opposing possibilities competing, it looks like we will have a boring trading market for a couple of days. In this case, the market might test the downside again before rallying for a safety check. The rally will not start unless the market gains confidence that the downward stress is limited. It is important to keep in mind that a test to the downside could happen in some form after CPI report regardless of the result, as it does not look like it will happen before the CPI release at the moment. Most likely, the rally will come after the stress test. The opposition scenario is that the market tests the resistance level again early next week and breaks through it, leading to a rally. This could be an opportunity for investors to hold on to their current positions and profit during the rally. The rationale for this scenario is as follows. China's Consumer Price Index, CPI rose slightly more than expected in July, suggesting that the country's economy is developing in a positive direction. Other recent news included lower CPI in Norway and interest rate cuts in Mexico and Peru. In the technology and media sector, there were positive updates across the board, such as TSM's strong earnings since Thursday. Efforts are underway in the US, Egypt, and Qatar to reach a ceasefire agreement in Gaza. While the opposite scenario has merit, we believe it is unlikely that good news from abroad will trigger a rally, as the main concern in this market decline has been whether the US economy is slowing down. Nevertheless, viewers should take note of the concerns raised by the counterfactual. Volatility has dropped unexpectedly big, and it looks like investors are starting to relax. On the other hand, the market's resistance to the upside is also strong, so it looks like we're in for a boring trading session until the CPI release. Regardless of the CPI results, a rally may not begin until the market tests the downside stress. Unless next week's analysis turns the tide, it may be wise to do nothing. Viewers may be wise to consider both the main outlook and the contrarian scenario to manage risk effectively. Thank you for watching. Fullhapce Intelligence, the best investment partner for swing traders.